So you're thinking about adding the stability of gold to your retirement plan. That's a great thought. But right away, you're going to face a huge choice. Do you want to own the actual physical metal itself, or do you want to own a stock that just tracks its price? This really comes down to two totally different options: a gold IRA versus a gold ETF. So let's dive in and figure out which path might be the right one for you.
I mean, for thousands of years, gold has been the ultimate symbol of wealth. It's real, you can hold it, and when the economy gets shaky, investors just flock to it. Why? Well, it's seen as a solid hedge against inflation and all the crazy swings in the stock market. It's that physical sense of security that people are really after.
But the real question for us today isn't just if you should own gold, but how you should own it. The financial world has given us all these new tools, and that brings us to two very different ways to hold gold in your retirement account. You can pretty much boil it down to a choice between physical gold and paper gold. The physical path, that's the gold IRA, where you get direct ownership of the metal. The paper path is the gold ETF, which gives you exposure through the stock market. Let's take a closer look at each one.
Okay, first up, the gold IRA. Now, this is a special kind of retirement account that lets you own real physical gold. And yeah, we're talking about actual bars and coins that have to meet some pretty strict IRS purity standards. Now, here's the key thing. You can't just stash it in a safe at home. Nope. The IRS says it has to be managed by a custodian. That's a financial institution that holds and secures your gold for you in an approved vault.
And this right here, this gets to the absolute core appeal of a gold IRA. You directly own it. It's your name on those bars, your name on those coins, sitting safe in a depository. It's an asset that is held for you completely outside of the traditional banking system. All right, now let's switch gears and look at the other option, the gold ETF. ETF stands for Exchange Traded Fund, and trust me, this is a completely different animal. An ETF is a financial product that trades on the stock market, just like a share of Apple or Google. Each share's value is tied to the price of gold. But, and this is a big but, you don't actually own any metal. You just own a tiny piece of the fund that owns the metal. And this is the world of the gold ETF. It is all about convenience and speed. You can buy and sell shares instantly right from your regular brokerage account. It makes it incredibly easy to get exposure to gold's price without worrying about any of the logistics of, storing giant metal bars. So let's just boil it all down. The choice really comes down to what you value most. Is it the security of owning a real physical asset that you could theoretically have delivered to you in retirement? Or is it the modern convenience and the instant liquidity of a stock that just follows the price of gold? Okay, now that we've got the basics down, let's really get into the nitty-gritty. Let's put these two options head to head and compare the details that really matter for your retirement savings.
Let's kick things off with ownership and taxes, because this is a huge one. With a gold IRA, you get all the same awesome tax advantages of a normal retirement account. But a gold ETF held in a regular brokerage account, oh, that's treated very differently by the IRS. They consider it a collectible, kind of like art or fine wine. And that means your profits get taxed at a special, much higher rate. This has massive implications for your long-term returns.
And here's the number that you absolutely have to remember: 28%. That's the long-term capital gains tax rate on collectibles. Now, to put that in perspective for you, most of your other long-term investments, like stocks, are taxed at 15 or maybe 20%. That extra 8 to 13% might not sound like a lot right now, but over decades of growth in a retirement account, it can eat away a huge chunk of your profits. Honestly, this is probably the biggest financial drawback of a gold ETF, and it's something a lot of investors totally miss.
Okay, next up, fees and liquidity, which is just a fancy way of saying how quickly you can get your cash. A gold IRA has annual fees for the custodian and for the secure storage of your metal, which are usually flat fees. An ETF, on the other hand, has a very low annual expense ratio, which is just a small percentage of your investment. But the biggest difference here is speed. An ETF is super liquid. You can sell your shares in seconds. Selling physical gold from an IRA, well, that's a much more deliberate process. It can take days, sometimes even weeks, to get everything sorted out. Now, if you're leaning toward a gold IRA, listen up, because the company you choose to work with is incredibly important. For years, the industry has been stuck in this old-school approach, but now a new, much more transparent model is starting to take over. This quote it nails the traditional experience perfectly. It was often this high-pressure sales environment where you had to call a commissioned salesperson for every little thing, the pricing was murky, the fees were hidden, and you had very little direct control over your own money. So what should you look for instead?
Well, the new model is all about transparency and giving you control. You want to see fees published clearly online, right on their website. You want a self-service digital platform so you can manage your account 24/7. And you absolutely want to be able to sell your holdings quickly without having to haggle with a salesperson.
All right, we have covered a ton of ground here. We've looked at the trade-offs between ownership, taxes, fees, and liquidity. So now, it's time to bring it all together and ask that final, all-important question.
And this is really what it all comes down to. A gold IRA is for that long-term investor who really values the security of owning a tangible asset that exists outside the traditional financial system. A gold ETF, on the other hand, is for the investor who prioritizes low costs, convenience, and the ability to react instantly to whatever the market is doing.
Look, there is no one-size-fits-all answer here. I can't give you one. The best path for you depends entirely on your own financial situation, how close you are to retirement, and what role you really want gold to play in your bigger portfolio.
So if you're leaning toward a gold IRA and you really want to do a deep dive on all the specifics, we're talking IRS rules, storage options, how to evaluate different companies, we've linked a free, comprehensive guide for you in the description below. It's a fantastic next step to help you make a truly informed decision. Thanks so much for watching.